Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live. It's actually take two because we thought we were already going live and I think I forgot to hit the button or something didn't work. So we'll try this again. No harm, no foul for those who didn't even know that we were 5 minutes delayed. But as always, we're going to talk about the crypto markets here. For those who like to read, you can definitely just go to our website, Arca, ar.ca/blog, and read That's Our Two Satoshis. Or as always, you can check in here weekly and hear our thoughts. So I'm joined by my partner, David Nage, who runs our venture portfolio over here at Arca and has been with us since the inception of Arca to talk about a few predictions. But before we get there, David, kind of a weird week in the markets. Overall, Sunday to Sunday, ahead of, now it's Tuesday. We've had a little bit of a dip over the last 36 hours, but Sunday to Sunday was, a little bit more strength in the market led by not Bitcoin, but by alts. And then a lot of that gave back over the last 2 days with a little bit of a leverage flush. But what was interesting to me is everyone's back in crypto again. You can check by, the crypto apps ranking with Robinhood and Coinbase near the top. You can look at, Google Trends. You can look at all kinds of sentiment indicators to show that people are back, right? People are reading our blog more religiously. People are texting us again. There's all kinds of things going on, but the reality is there hasn't been that much of interesting news in the last few weeks. Most of the interesting news has happened in the last 9 months, and it's just now being reflected into price post the election. I think the only thing that was interesting to me last week was that you're just starting to see more and more, I guess, for lack of a better word, validation of Bitcoin, meaning governments are starting to talk about Bitcoin reserves. You had Fed Chairman Powell comparing Bitcoin to virtual gold, saying it's not a competitor to the dollar, but it's a competitor to gold. You're seeing corporations talking about adding Bitcoin to the balance sheet, something that, for avid That's Our Two Satoshis readers, that I wrote about in 2020, talking about why Bitcoin is the perfect treasury asset. But anyway, it just wasn't a super interesting week. But I think the next couple of weeks will be interesting in the sense that here come the predictions for 2025, right? I'm going to be out with my predictions in the first week of January. I saw Bitwise just came out with their predictions. David, I know you've got a couple predictions, which we're about to talk about.
Yep.
So let's get into that. And of course, for the readers who want to go to our blog, you'll be able to read all these predictions over the next couple of weeks as well. But David, let's start with, given that you're a venture portfolio manager, what's happening in the venture market? What do you see in terms of changes from 2024 into 2025?
Yep. And so one of the things I think is really important is that we've seen geographic shifts. And so in Q3, we saw that the United States was accounting for about 56% of all the venture capital invested, which is about a 5 to 10% decrease quarter over quarter. This has been, kind of a routine number that has been dwindling quarter over quarter for the last 2 years because of the regulatory issues here in the United States with lack of clarity. The United Kingdom represented about 11%, Singapore had 7%, and Hong Kong had about 4%. And thank you to the folks at Galaxy Research to be able to post this. And so we think what's going to happen, there's a few things, and we think there's going to be some positives that come through a lot of the new things that are going to happen with the new administration. First and foremost, we have a bunch of new stakeholders coming in 25. And these are pro-crypto people that have been around the industry, working in the industry. Scott Bessent at Treasury, Howard Lutnick at Commerce Secretary, and Paul Atkins at the SEC. Paul Atkins is very interesting. He's been involved in many of the different aspects in the local DC area in terms of information research, speaking to those in the regulatory policymaker bodies. He's also had a very long-standing relationship, as far as I know, with Hester Peirce. And so we think this is a great thing for the industry going forward. I think one of the things that's going to happen here is that FIT 21 was a bill that was passed initially to protect consumers by strengthening transparency and accountability with market participants. This is similar in some aspects to what MiCA was in the European Union last year, where essentially anyone could, basically try to have a new digital asset offering, but there were pieces of it that you needed to do. You needed to do a stress test, a simulation, things to provide more clarity and transparency about the offering. And so I think with some of the new stakeholders coming in, FIT 21 is going to get a refresh. I think it's going to be much more positive for the crypto industry. And where I think this is going to have a serious material effect is in new token issuance, which has been, for many intents and purposes, dead for the last 2 years since Q2 of 22. And so I think what we're going to see here is we're going to see more token issuance. And why this is important is that from the venture perspective for the last 2 years plus, most of the funding vehicles have been safes, simple agreements for future equity with a warrant. You necessarily couldn't become decentralized and distributing your network because of the issues here with regulatory clarity. With more pro people in the administration, with better positive regulatory guidance, I think we're going to see that more. And we actually are seeing some of that actually happen already overseas. There is a launch pad called Fjord Foundry that has already claimed to do $1 billion in new projects raised over the course of the last few months. And so I definitely believe this is going to have a big effect on a lot of the companies that have been invested in, that have that warrant that can become a token and go through that process. And so I think you're going to see more new token issuance in 25, more liquidity coming into the market. And obviously for investors and funds, you're going to hopefully see some things on the DPI side.
Well,
From a fundraising,
and hopefully the venture capital community, as well as the founders, as well as the exchanges and market makers, have learned a lot over the last year and a half. I mean, I've been on record, as have you, multiple times about how horrible some of these launches have been.
Yes.
I mean, there's just no other word for it. I mean, they were egregious. They were borderline illegal, with the way they were launching these tokens at insane valuations, just destined to go down. And then on the flip side, you see the success of some of these fair launches more recently that have gone up, even things like Hyperliquid most recently. I think ultimately more tokens is a good thing. I've always said that I think tokens are the greatest capital formation and customer bootstrapping mechanism ever created.
you want that on your tombstone.
I do, because it's the best. I mean, every single entity in the world should have a token at some point, because it is the best way to align your stakeholders and your customers and help to grow a business. But it is unfortunate that the last couple of years have been taken advantage of by these exchanges and market makers and founders. So hopefully we learn some things. Hopefully some of these new batch of token launches are much better than we've seen in the past. And I look forward to seeing some of the changes in the market that we'll see as a result of the failures of the past and some of these recent success and fair launches.
Absolutely. I think the last thing here on that is that, this year we're seeing about only 39 new funds that have raised about $2 billion in the market, which is really low. It's well below what we saw in 21 and 22. And so for the dry powder in the market, in 21, you saw about 30 some odd billion. In 22, you saw roughly about 30 to 31 billion allocated. Last year was about 12, 13 billion. This year, it's going to be just around the same, around 12 to 13 billion. And so hopefully with a new injection of stakeholders in the administration, with better positive regulatory clarity, we're going to see more fundraisers. We're going to see funds coming to the market, able to raise capital. And again, injecting some of those great founders and new projects out there in a way that we haven't seen in a few years.
Okay, great. Well, let's move on from the private side and more into the liquid side, or really just broader kind of crypto markets. Any sectors that you are looking at here in terms of sort of breakout themes or sectors for next year?
Yeah, we've been really keyed up on what's happened with AI and the confluence of AI and digital assets. From a venture perspective, we've been making a few investments in that space now for the past year and a half, where we've seen that effectively in 2026, it's forecasted that the human trainable data that goes into these large language models like a ChatGPT or a Midjourney is starting to become quite extinct. And so we saw that there was a way where, again, digital assets and the crypto infrastructure and Rails could play a way where humans could train these models and basically be incentivized and aligned with them. So we thought that was great. But what we're seeing right now is a huge explosion in the last 6 to 7 weeks, where AI agents are starting to become, as you alluded to, there's fair launches of new agents that can do utilities, that can do certain projects for you, that can create video for you. And right now, what we've seen, from about, middle of October to now, we've seen this market blow up to about $8 billion in market cap from nearly non-existence. There was a few players like BitTensor and Tau, but we didn't see very much in addition to that. And now we've seen just this Cambrian explosion of AI agents. And so I think in 25, we're probably going to see this market cap reach to $70 to $100 billion market cap in total, about 10x from where we are today. And, reference point, the stablecoin market cap is roughly about $198 billion. So I think it's within reach. And what we've seen specifically is we've seen launch pads for these agents, meaning that you and I and everyone listening can go to a launch pad, which is a low code, no code place, and say, I want to create this agent to do this job and give it this persona, give it this type of kind of responsibility, and it will go and do that for you. There's
I can create a Jeff Dorman AI agent that just every time someone tweets at me, it just responds with my favorite line: the tokens are the greatest capital formation and customer bootstrapping mechanism ever.
You can do that, or you can have them, give them, specific Cleveland Indian references or Cleveland Guardian references, for your favorite baseball team. Yes, you can
Perfect.
create that.
Looking forward to training an AI agent based on my favorite hits.
Yes, there you go. So there's two out there. There's virtuals, and then there's the ELIZA framework. The ELIZA framework is from the team AI16Z, and virtuals is on the base ecosystem, and the ELIZA team is on the Solana side. Both of these, low code, no code, you can create agents, and you've seen this huge explosion of that. For example, Alliance DAO, which is one of the accelerators that our venture team has really relied on for the last few years, with amazing teams coming out of them. They have 250 projects they announced that are currently leveraging the ELIZA framework to build new projects within the space. And so we see that, this is going to give rise in 25 into 26 of more of what we call intent and resolvers, meaning that everyday people can go and basically type in something very human centric, like, I want to swap this for this. I want to do this. Please help me do it. And the AI agent is going to do it on the back end. And so the way that I've equated this is that in the early days in the internet, before we had Amazon.com, it would be a long string of numbers, an IP address. And then DNS came through, domain name services, and all of a sudden you could say Amazon.com or Google.com or AR.ca. And that made it more human readable and more human centric. This is what I think is going to happen with the AI agents and DeFi going into 25, where everyday people can start to lever these instruments, these mechanisms, and start to get really more involved in DeFi.
With the AI stuff, I mean, is it simple enough to just say, as of right now, you have your actual chains, something like a BitTensor that is basically a protocol where you can build all types of AI projects on. Then digging deeper, you have platforms, as you mentioned, that are helping anybody to launch specific AI agents. Then you have the AI agents themselves, things like AI XBT that you can invest in. And then, of course, you have some of the open source code and frameworks, like you mentioned, with ELIZA and virtuals. And virtuals is kind of a double duty, right? It's both a platform and a code base. But is there more broader categories? And for those who also join our crypto market call, which we're doing on Thursday, when I'm joined by Joey Reinberg, as always, we're going to go into more detail on some of the specifics ones we just mentioned for those who want to get a little more deeper when we have more time. But are there any other subcategories here that you're looking at beyond what I just mentioned? Sort of your protocols, your frameworks, your agents, and your platforms?
So that's kind of the working taxonomy. We have the meme agents. The meme agents are ones where, again, it's very simple. You can just create something and say, I want you to post on Twitter and Discord, and this is your persona. I want it to be kind of like a smart ass, if you will. Or you can actually do ones that have real utility and real function. I want to be able to create this. I want to be able to make this video. I want to be able to this content, and they can help you do that. Where I think this goes is, right now it's a very human to AI agent approach. It's almost like a DoorDash thing where it's saying, I want to do this, please help me do it. Where I think it's going to go very quickly in 25 into 26 is agent to agent, meaning that these agents are now going to be talking to each other. And we've already seen evidence of that. There was one where two agents spoke to each other online on a social media platform and basically created something called Luminous, which is another kind of AI agent. And so they're talking to each other. And so I think what's going to happen here is that these agents are going to start talking to each other. And one of the areas I think is going to be really disruptive is IP. So much of the content that we have out there is digitized already. For example, music. There's 100 million songs according to Apple Music. And imagine a gatekeeper and a keymaster, where the gatekeeper basically controls catalogs of music, and a keymaster is another agent that basically says, hey, this artist has asked me to get 3 songs to sample for his new album. And the keymaster basically has to get it from the gatekeeper. And they work together, agent to agent, figuring out, where they can get that music catalog, where they can get those songs, pay each other for the time and effort and the resources. We call it, kind of metering resources. And because they both have wallets, they can basically do it in either a digital asset, native digital asset, or a USDC or something like that. That's where I think this starts to go, is that agents to agents start working together and doing these projects, basically just being prompted potentially by their users.
Got it. Okay, we're running short on time here. Take us home. Third prediction: do we get an actual breakout consumer app in 2025? And
Yep,
if
I definitely. I think we're close. What we've seen. Coinbase is Coinbase. Whenever you say consumer application, people always point to, well, we have Coinbase. Everyone using, there's 60 million plus users of Coinbase. Well, I think we get to 100 million users on a crypto asset kind of platform this year, coming into 2025. And why I say that is because the infrastructure that has been, basically pumped into this market for the last few years has created things like account abstraction. Account abstraction means that, the old days, you'd have to know a lot of things in terms of front end systems with crypto, wallets, keys, lots of different things, API management, et cetera, is convoluted for the everyday user. All of that has gone away with account abstraction, basically meaning you can, go into these platforms with your email address or your social media presence, your credentials, and get access because it basically creates a wallet for you. That account abstraction has led us to things like Farcaster, and to many extents, Polymarket. Polymarket, over the last few months has seen massive volumes, especially during the elections. It was, eclipsing $2 billion in volumes. And right now, in middle of December, it's already done about $500 million in volume. So it hasn't gone away because of the elections. And this is because it's easy to use. The UI UX is there. It gives people something to do. It gives them a reason to be involved in different aspects of society, not just politics, but sports and gaming and anything else that they can think of. Farcaster also showed us that you can actually build a native mobile application that uses crypto Rails. That right now they have about 520,000 casts. That's their tweets per day on a 30-day basis. They have over 790,000 addresses connected to Farcaster, and they have roughly about 50 to 60,000 monthly active users. And so these two, to me, show that we're getting to a point of inflection where you can actually build, especially for mobile applications, you can build native mobile applications that are fun, enjoyable, easy to use, and give people a reason to come back every single day. And so I think in 25 into 26, we're going to see that breakout of 100 million users on one of these applications.
It is worth noting that, both of the ones you mentioned, Farcaster and Polymarket, kind of a flash in the pan in terms of like, Polymarket, obviously massive growth around the election. Then it's cooled off. Not it's not dead. It's still doing quite a bit of activity, but I mean, certainly was timing based in terms of right place, right time around the election. Farcaster, obviously, this is one of hundreds of attempts to build something on the social side, and too early to tell if that's one that's going to have real staying power. Is it possible that one of the fallacies of crypto and especially kind of token incentives is that it sort of builds up users too fast and then it ultimately will cool down? And I recognize the irony of me asking you that when neither Polymarket nor Farcaster was using a token for that incentive. But why do you think you see so many of these hot starts that then cool off rather than sort of the sustainable growth that you would have expected to have seen by now to get to those kind of 100 million users?
Yeah, I think it's because at the initial time, these applications are thrown with a lot of different functionalities. They're not necessarily honed in on one or two that have you come back every single day. Like with Twitter, with X, I come back because it gives me up-to-date information on the market or what's happening in the world. There's a specific function to it that comes back to it every single day for that. Or if it's anything else, like, like a Slack or any other applications that we use on a daily basis, there's usually one or two things that are very specific to why I keep coming back or why you keep coming back to them every single day. With Polymarket and with Farcaster and some of the other attempts, I don't think that they necessarily honed in on that yet. I think it's been a lot of kind of testing in the wild, if you will, to find that product market fit. But once he started to figure out with Farcaster, for instance, that they could create these things called frames or have more of the Spotify type, not Spotify, but more of this kind of approach where you can buy things on there or you can interact with different applications and games on there. I think initially it's like throw anything you possibly can at the wall on these things and let's see what sticks. And I think at the end of the day, where you really start getting that velocity of retention is you narrow down to one or two things that you do exceptionally well that brings people back every single day. And I think once we get there, and I think we're getting there now with the infrastructure and the Rails, I think that's when, as I said, again, you get to 100 million plus users.
Well, I hope you're right, and I look forward to discussing it at the end of 2025 to see multiple apps that reach that kind of traction. So David, I appreciate you joining. Again, for all those listening, all these will be in write-up form as well. You'll be able to get them on our website towards the end of this year and into the early next year. But David, appreciate that. That was great. And for all of the rest of you, we'll be back again next week with another edition of That's Our Two Satoshis Live. So thanks, everyone.
Happy 2024, folks.